All right, folks, let's talk Wells Fargo, WFC. This is a name that's been through the ringer. Today, as of June 4th, 2025, the stock is trading around $79.95. It's been nudging its 52-week high of $81.50. But $1,000? That's a different stratosphere entirely. To get from roughly $80 to $1,000, we're talking about a monumental leap. Do the math with me. That's a 12.5-fold increase. If that happened, Wells Fargo's market capitalization would explode. We're looking at something in the neighborhood of $3.6 trillion. Think about that number, trillion, with a T. That would make it one of the biggest companies on the planet. This isn't just about a stock going up, it's about a fundamental revaluation of a massive institution. It's a climb, a steep one. So, what does this journey entail? It means Wells Fargo has to do more than just well. It has to perform spectacularly. It needs to fire on all cylinders, consistently, for years, maybe decades. We're talking about navigating economic storms. We're talking about outmaneuvering an army of competitors. We're talking about innovation that blows the doors off. This isn't just about steady Eddie growth, this is about transformational growth. Now let's get to the exciting part, the bull case. Why could Wells Fargo make that incredible climb? First up, the elephant in the room, that Federal Reserve asset cap. It's been like a ball and chain, limiting them to $1.95 trillion in assets. But listen to this, there's chatter, strong chatter, that this cap could be lifted, maybe even by mid-2025. Imagine the floodgates opening. That means more loans, more deposits, more growth. That's rocket fuel, people. This single catalyst could be a game changer, but it's not just about the cap. Wells Fargo is revving its engines in other areas too. Investment banking, showing strong performance. Wealth management, absolutely booming. These are high-margin businesses, folks, and they're pushing hard into AI, artificial intelligence. Think fraud detection, super smart risk management, personalized banking experiences. This isn't your grandpa's bank anymore. They're innovating, they're adapting, they're looking to the future. This technological edge could be a massive differentiator. Some analysts are already seeing the potential. They're throwing out some big numbers. I've seen forecasts putting WFC stock at $590 by 2030. And get this, $1,130 by 2040. Now those are just forecasts, but they show you the kind of optimism that's brewing. Alright, time for a reality check. No pain, no gain, right? But sometimes there's just pain. We have to look at the bear case for Wells Fargo. What could stop this $1,000 dream in its tracks? First, the banking sector is cyclical. It ebbs and flows with the economy. When the economy booms, banks do great. When it tanks, banks get hammered. This is a fundamental risk you cannot ignore. Wells Fargo is heavily exposed to these cycles. An economic downturn could put a serious dent in its ambitions. Then there are the ongoing regulatory constraints. Yes, they've made progress, but 8 consent orders still remain. That's not insignificant. And that big Federal Reserve asset cap we talked about? It's still there for now. These regulatory burdens can stifle growth, they can increase costs, they can limit flexibility. And remember, Wells Fargo has a history here. They need to stay squeaky clean. Any missteps could bring the regulators knocking again. That's a constant pressure they operate under. It's a tightrope walk. Let's talk about their financials for a moment. So how does Wells Fargo stack up against the other big dogs on Wall Street? Let's put them side by side. First, JP Chase, the biggest US bank by assets. JPM is a powerhouse, especially in fee-based revenue and tech innovation. They are often seen as the gold standard. However, JPM also faces market volatility, and they get plenty of regulatory scrutiny themselves just because of their size. It's a tough comparison, but one WFC investors must make. JPM sets a high bar. Then there's Bank of America, another behemoth. BAC has a broad range of services and a very strong retail network. They've had a good run too. In 2024, BAC gained 42% year-to-date, while Wells Fargo gained an impressive 51%. So WFC has outperformed recently. But BAC is a formidable competitor. They share similar economic sensitivities with Wells Fargo. If the economy sneezes, both these banks could catch a cold. It's a constant battle for market share and investor confidence between these giants. What about Capital One? They're a different beast. Section 5, Under the Hood. A deep dive into Wells Fargo's financial engine. Let's pop the hood and look at Wells Fargo's financial engine. What's making this thing hum or sputter? Profitability is key. In the third quarter of 2024, their net profit margin was around 25%. That's healthy. They pulled in a $5.1 billion net profit on $20.4 billion in revenue, not too shabby. And their return on equity, or ROE, improved to 11.7% in Q3 2024 from 10.6%. That shows they're getting more efficient at generating profits from shareholders' equity. These are good signs. Positive momentum. Fee-based revenue is increasingly important for banks. It's less sensitive to interest rate swings. And Wells Fargo is growing here. Fee-based revenue grew 16% in the first 9 months of 2024. That's strong. This includes things like wealth management fees, investment banking advisory fees, and brokerage activity. This non-interest income grew 12% in Q3 2024. This growth in side revenues is crucial. It helps offset declines in net interest income when funding costs rise. It's about diversification of income streams. Now let's talk debt and capital. Banks are leveraged businesses, that's their nature. Wells Fargo's total debt rose to $219.5 billion in 2023. Section 6. A look back. Wells Fargo's roller coaster journey, since IPO. To understand where Wells Fargo might go, we need to see where it's been. This isn't some flash-in-the-pan company. They had their IPO way back in 1972. Think about that. Nixon was president. Bell-bottoms were in style. Since then, it's been a long and often bumpy ride. The stock has split 6 times. In 1977, 1988, 1989, 1993, 1997, and 2006. If you bought 1 share at IPO and held on, those splits mean you'd have 48 shares today. That's how long-term wealth can be built. And the returns? Over the very long term, Wells Fargo has delivered significant gains for patient investors, but it hasn't been a straight line up. Far from it. More recently, the stock has shown some real muscle. As of early 2025, the return over the past year was a sizzling 57.8%. That's beating the pants off many other investments. Year to date in 2024, WFC gained 51%. Compare that to the S&P 500's 28% gain over the same period. That's outperformance, plain and simple. Investors are taking notice. Section 7. Crystal ball gazing Wells Fargo's path through 2030, 2040, and 2050. Let's pull out the crystal ball. What could Wells Fargo look like in 2030, 2040, and even 2050? Their long-term strategy is clear. Focus on fixing regulatory issues, transform digitally, and diversify those revenue streams. By 2030, that asset cap could be a distant memory, hopefully lifted by mid-2025. This would unlock significant growth. They'll be much deeper into AI by then, using it for everything from super-tight fraud detection to hyper-personalized banking. Wealth management will be a bigger piece of the pie, focusing on high-net-worth clients and expanding digital platforms like WellsTrade. Fast forward to 2040. We could see Wells Fargo leveraging even more advanced technologies. Think next-generation AI, maybe even quantum computing for complex risk modeling and creating innovative financial products. That's way out there, but it's the direction things are heading. ESG, environmental, social, and governance initiatives will likely be much more prominent. More green loans, more investments focused on climate solutions. Banks will play a huge role in financing the transition to a sustainable economy. Wells Fargo will want to be a leader there. Section 8. The $1,000 verdict: is Wells Fargo's moonshot feasible? So we come to the million-dollar question, or in this case, the $1,000 per share question. Can Wells Fargo stock actually hit that magic number? Let's break it down by timeline. By 2030, that's just 5 years away. To go from $80 to $1,000 in 5 years would require an average annual growth rate that is, frankly, astronomical for a company of this size and in this sector. Most analysts consider this highly improbable. It would need a perfect storm of positive catalysts and 0 missteps. Possible? Maybe. Plausible? Not really. What about by 2040? That gives us 15 years. It's a longer runway. If Wells Fargo successfully navigates the next decade and a half, if that asset cap is lifted soon, if their tech investments pay off massively, if they capture significant market share, and if the overall economy is strong, then $1,000 becomes less of a pipe dream and more of a very ambitious target. it would still require unprecedented sector dominance and sustained stellar growth. We're talking about them becoming the undisputed king of banking. And by 2050, 25 years from now, predicting anything that far out is tough. The world will be a different place. The financial industry will be transformed. If Wells Fargo can truly evolve into that hybrid bank fintech powerhouse we talked about, if it can lead in areas like AI and quantum computing and finance, and if it expands its global footprint successfully, then yes, $1,000 could be within reach. But the ifs are enormous.